Hello everyone, welcome back to our channel. Have you ever thought about investing your money but felt completely lost or scared by the idea of the stock market? Many people think investing is only for experts or very rich people, but that's not true. Today we're going to break down investing for beginners and simplify the stock market so you can feel confident taking your first steps towards making your money grow. It's not just about saving, it's about making your savings work hard for you over time. So, what exactly is the stock market? Simply put, it's a place where you can buy tiny pieces of big companies. When you buy a share of a company's stock, you become a part owner of that company. If the company does well and grows, the value of your share often goes up. This means your money grows. It's like owning a tiny piece of a successful business. Now, how do you actually invest? For beginners, there are two main ways to start that are usually easier than buying single stocks. First, mutual funds. Imagine a big basket of different stocks, bonds, or other investments managed by an expert. When you invest in a mutual fund, you're buying a small piece of that whole basket. This is great because your money is spread out over many different companies, which makes it less risky than putting all your money in just one company. Second, exchange traded funds, or ETFs. These are similar to mutual funds, but they trade like stocks on the market. They often track an index, like a group of India's biggest companies. Like mutual funds, ETFs offer easy way to diversify, meaning you spread your money across many different investments to reduce risk. If you're finding this information helpful and less confusing, please press the like button right now. And if you know someone who wants to start investing but doesn't know how, please share this video with them. Your support helps us simplify money for everyone. Now, here are some really important ideas to keep in mind when you start investing. Think long term. Investing is not a get rich quick scheme. The real magic happens over many years. Give your money time to grow. Diversify, diversify, diversify. Don't put all your eggs in one basket. Spread your money across different types of investments and companies. This helps protect you if one investment doesn't do well. Start small and be consistent. You don't need lakhs of rupees to start. You can begin with just a few thousand rupees or even 500 rupees a month through things like SIPs, systematic investment plans, in mutual funds. The important thing is to start and keep investing regularly. Patience is key. The market will have ups and downs. Don't panic during dips. Stay calm, stick to your long term plan, and trust that the market generally grows over time. Finally, a few common mistakes new investors make that you should avoid. Fear of starting. The biggest mistake is not starting at all. The longer you wait, the more growth you miss. Trying to time the market. Don't try to guess when the market will go up or down. It's almost impossible. Just invest regularly, no matter what the market is doing. Putting all your money in one place. This goes back to diversification. Don't risk everything on a single stock or a single type of investment. Listening to hot tips. Invest based on research and your own goals, not just what someone tells you is the next big thing. Investing in the stock market can seem scary, but it's one of the most powerful ways to build real wealth over time. Start simple, be patient, and focus on long term growth. Your future self will thank you for taking these smart steps today. What's your biggest question about starting investing? Ask us in the comments below. And if you want more easy to understand money advice that helps you feel confident about your finances, please subscribe to our channel right now. Make sure to tap that bell icon and then tap it a second time so you never miss out on our new videos. We're here to help you on your money journey. See you next time.